This is going to be the most important video you watch this week because I am about to save you from investing in some terrible stocks. So let's go ahead and break it down. I have a list of a few stocks that are the worst for new investors. You might be thinking, okay, well, why is this the worst for new investors and not everybody else? Well, the reason is sometimes as new investors, and I've been there myself, we tend to invest where we spend our money. That is one of the first things you learn about investing is if you shop at X store, you should buy shares of X store, right? And that's just what you should do because you would understand that business. That's not always the case. That's not always the case. And for example, the first one on here for new investors that I would not recommend investing in is a company like Target. Target's down 25% in the last 6 months and also down 25% over the last year. It is balanced as all things should be in all the wrong ways. And Target is not an anomaly in this case, meaning that it's been losing money for close to 2 years now. So it's not just all the weird political stuff and protests that have happened this year. It was doing that before. And I've done an entire video where I did my research, I invested in Target, and I said, oh, I'm losing money here. Things are adding up. Let me get out. We talked about their earnings report. We talked about how they mismanaged some of their inventory in the home goods division. That is dressers, I was going to say houses, but dressers, beds, all that type of stuff they were mismanaging. And I even said that when Walmart had partnered, I think it was with Paramount, for a streaming service, and they were wrapping that up with their Walmart Plus program, I said, well, Walmart has something with the streaming service. Amazon's got something with the streaming service. What is Target doing right now? That was a year ago now, and they have not figured that out. They have not figured it out, and things are getting even worse. I don't see a reason as to why this would turn around at this point in time. That doesn't mean that any company on this list might not be great next year or 3 years from now. I'm just saying right now, based on what we see, it's not something I could say, hey, I would tell my kids to invest in. And y'all know what my kids invest in currently, right? It's not something I would say, yeah, this is one of the best stocks for new investors to buy. I don't feel confident in where Target is heading. And this is not the first time that they've been in this type of situation. It has been ongoing now. We're going on 2 years. If this continues in 2024, we're looking at 3 consecutive years of bad performance here for Target. All right. Next one here is one that is alluring because of the dividend. And we talked about dividends before on this channel, especially in the last 2 weeks or so. That's AT&T. AT&T is down 27% in the last 6 months, down 23% over last year. And it's just not worth it. AT&T is probably, if I'm looking at this list now, probably the worst here in terms of the longest track record of losing you money. There are tons of people that say, oh, AT&T is paying a 5 or 6 or 7% dividend, but if you get $1 and you're losing 23, what difference is that dividend really going to make in your portfolio? Hint, it's not going to help you. Okay, so that's just one I would just easily avoid. I could also throw Verizon here too because they tend to go neck and neck in terms of losing money, but I don't have anything good to say. I'm sorry. I don't have anything good to say about AT&T. And I doubt that's going to change in 2024. Hopefully it does. Hopefully it does. But what we know right now, that's not a company I would be confident in telling a new investor to buy. Next one is Nike. Okay, now we had talked about Nike because my daughter currently owns Nike. At this point, by the end of this year, she will not be owning Nike. Okay, so right now, Nike is down 17% in the last 6 months and down 10%. Just 10%, because that's the best performance here, down 10% over the last year. The only good thing about Nike is that this is an outlier. Nike, you can say over the last 5 years, even the last 10 years, Nike is a decent performer. It has done okay, with the exception of this year, and obviously COVID was an outlier for almost every stock. But this one is one where it's like, hey, it's down, but it doesn't really have a good reason to be down. This is the only one I would circle and say, hey, maybe this one can improve. And if I had to bet and say which one's going to do better in 2024 or over the next 3 years, I would have to go with Nike because everybody else has a terrible track record of return. So the only reason they're here is because it is a brand that people do like and do have a feeling for, whether it's a Jordan brand or just Nike or Tiger Woods or whatever brand, but it's not doing well. Okay, and what I don't want you to do is just, oh, I like Nike, I wear Nike shoes, so I'm gonna go buy shares and not really understand what the company is going through right now. Before you invest in any stock, but especially Nike, know why the stock is down and whether or not it has a clear path for gains in the future. And for me right now, I don't really see an answer for that. So I might have to get rid of it. That's a might. I still got time between now and December. But right now I'm not really happy about where Nike is heading and what I think they can do in the foreseeable future. So we'll see for that one. Next here is Moderna. Now this was very popular during the pandemic, but they're down 34% in the last 6 months and down about 26% over the last year. That is with today's gain. Today, at the time I'm doing this video, they were up 9%. And they're still down 26 over the last year. So that shows you how far down the company was. It was worse had I recorded this on a different day. The reason why I would avoid this for new investors is really for two reasons. Number one, it has name recognition because of the pandemic. We got to let that go. As investors, we have to let a lot of that pandemic logic go. I think that for many people, they kind of anchor themselves in what happened in 2020 and 2021, in that you can go invest in a bankrupt company, you can invest in a company you never heard of, and because they're releasing a new drug, everything's going to take off and everything's going to be fine. That was not normal. That's not reality. I think we have learned now, especially people who have been on the channel for a while, you've learned now that sometimes you got to study. Sometimes you got to look at financial reports and do a little bit more research as opposed to just doing what people just say on a Reddit thread or something of that nature. And there's money to be had, but it might not be as easy as what it was. And I think Moderna is learning that, Moderna investors rather are learning that a bit differently now. They did partner, which is why it's up today, on a new cancer drug. We'll see where that goes. But the second reason is for someone who is new, okay, keyword new, it is hard to learn the stock market and learn the medical field. Unlike some of these stocks like Target, easy to understand, AT&T, Nike, easy to understand, the medical field is not. So that doesn't mean that you can never invest in medicine, but it does say that it's going to be a little bit harder because if they're releasing a cancer drug, how do I know whether it is going to have a good effect or a bad effect? I don't know. I don't know none of that stuff. I didn't know what mRNA was, right? Because I wasn't all that great in biology. Now, if you were, that's a different story. But I'm trying to get you to see the learning curve here. There are some stocks that are easier to understand than others, and you should be investing in the things that you can understand. So if you're in the medical field, or you did great at biology, or maybe you studied pre-med or what have you, then yeah, this one, I mean, I still would invest in it even if I did, but this one might be one that you can understand a bit more and see if this new cancer announcement is something worth investing in. I personally, at this point in time, do not, but again, I'm speaking from my own experience, and for new investors, if you don't have that medical knowledge, it's not one that I would check out. So just throwing it out there. Next one here is one I'm sure we all know, and that is Disney, down 18% in the last 6 months and down 30% over the last year. Unless your name is Netflix, which is still weird for me to say, but unless your name is Netflix, anything in media is not doing well. It's just flailing left and right. They're losing money. They're losing investors' money. And I've been saying this for a while now, even though I think they were overvalued. Now that has fallen even further. Perhaps that has changed. But I've said before, they're overvalued. I said before that the whole media rights stuff, they don't know what to do with ESPN. The park revenue is fine, but even with their new leadership, their new old leadership and Bob Iger, things haven't improved, and it is harder to make money through movies and streaming. They spend way too much on some of their movies and don't make nearly enough to cover those losses. Are some of those movies good? Yeah. Are some of those movies bad? Also, yeah. But if you're charging $12.99 for Disney Plus when you really need to be charging $40 or $50 for a subscription, that's not going to be something that math, the economy of scale is what we call it, doesn't really add up. So we're going to have to see what Disney is going to do. I'm not entirely confident that they're going to be able to do it in a way that makes sense. If I look at the last 10 years, only 2020, roughly only 2020, has been the only year that the company was up. They've been mid this entire time. They haven't been the company that we imagine, right? A lot of times, especially for new investors, we like the brand. I know I like Disney Plus. I show up to every Marvel movie. People love Star Wars. But the stock's not making money, okay? This is about you and your portfolio. And is Disney going to help you to get from point A to point B? And they have not done that with the exception of 1 year in the last 10, almost 12 years. So no, okay, I'm tired of Disney, And I don't want you to continue to fall in the same trap I did and many others in believing that just because you like the brand that the stock is going to do well. It just hasn't. Hopefully they do. Okay, this is just now, right? Maybe in the future they will. Right now they haven't, and the past shows they haven't either. Next year is CVS. CVS down 24% in the last 6 months and down about 35% over the last year. A little surprising because you would not expect a company that sells stuff that people need. Like, you don't see a CVS really go out of business often, at least I don't. But the company is down. I think sometimes, again, because you shop there, because you're closer to it, and they're usually in your neighborhood, you expect them to do better. They haven't. I'm not a big fan of anybody, new or seasoned investor, jumping into something that has negative momentum. It is, again, very difficult. If you lose 35%, you're going to need to make well over 35 just to break even. I would need CVS to start to turn the corner and have some reason to believe in. Right now, it just hasn't done that. Hasn't done that at all. And I really can't remember the last time that CVS was worth investing in. Another one on the list is PayPal. PayPal hurts. PayPal hurts. I don't invest in PayPal. I haven't invested in PayPal in 2 years. Okay, I told y'all when I got out of it. Okay, I put on Twitter the other day that PayPal was the best thing I ever sold because I said, look, it's going in the wrong direction. Things are falling off quick, and I got out nearly 2 years ago. And again, I broadcast it. It's a video on the channel where I told y'all I got out. Okay, but they're down 20% in the last 6 months, down 40% over the last year. And if I go back 5 years, PayPal is still down 30%. Like, really think about that. 5 years, you would have lost money on PayPal, which is extremely rare because usually, on average, if you invest in any stock, you have a greater than 97% chance that the stock is going to be positive. So this is one of the rare cases where you could have invested for something for the long term and still lost money. Not little money. We're talking 30% over 5 years. So that is mind-blowing to me because PayPal really doesn't deserve to be in this space. And someone had asked me the other day, do you think that PayPal is undervalued? I didn't answer. I said I'd get back to him, and I will. I want to go and do my research and see whether or not it's undervalued. But here's the thing. I thought it was undervalued 2 years ago, and it's still down. Just because you think it's undervalued or you do a calculation and say, hey, this is the price you should pay, the stock market doesn't care. And I said back then, and I will continue to say now, the way PayPal is organized and run, it shouldn't be where it is. The company's not losing that much money for it to be falling off a cliff. Like, I understand Target. I get it. Whether I agree or disagree or feel like they could have fixed this a long time ago with inventory and all that kind of stuff, hey, y'all could have fixed that. But I get it, right? If you got a lot of crazy people boycotting, I get it, okay? PayPal, I don't. I just don't. Right, I understand Disney. Some of your content hadn't been all that great. ESPN is expensive. People are cutting cable. I get it. Okay, whether I got cable or not, I understand why Disney is down. PayPal, I don't, because people are still spending. Right, things have been okay, you would think, and there have been some years where they have made more money and they had more users, and the stock still fell. That's not a place I would want to be as an investor and continue pouring money into something that's been falling at this rate with no clear sign to an end. And that's something that's extremely concerning for a company like PayPal. If you are looking and say, hey, you gave me a list of companies I should absolutely avoid, right? This is not a place where you would be confident in investing in the future, but where's a place I should invest? Like, do you have something, I don't know, perhaps a top 5 or a list for new investors? Say, look, these are the companies you should buy. Perhaps you should check out this list right here.